By the time you're watching this, I think the markets are higher already. How do I know? Actually, I don't. I'm just making a guess. But I've done some homework to look into the history. And do you know that this is not the first time that Donald Trump has wielded his tariff axe, trying to chop everybody down, causing market panic. I did some research and I found very interesting things, and that's why I'm a bit optimistic. And today, I'm going to share it with you. Hi guys, welcome back. Let's look at some charts together, how about that? To really get a sense of what is going on in this market crash. I understand some of you are panicking. I understand that some of you are not optimistic at all. In fact, very pessimistic. Because nowadays headlines are reading that we're going to see a recession, yada. But never mind. The first thing that I'd like to show you before diving on to previous history of Donald Trump's actions is to show you that this crash so far is actually not that bad. I don't know if you realize it or not. Newspaper is suggesting that this is the worst crash in 5 years. But when we count 5 years, we're excluding COVID, correct? And quite simply, if we backtrack a bit, now this drop for S&P 500 is about 18% from top to the very bottom. And it started on 13 February all the way until 8th of April, which is just 6 weeks. 18% drop, 6 weeks. Let's backtrack a bit and show you what exactly has gone on during COVID. First, we'll cross this 2022 bear market. This was when interest rates went up, correct? The drop was a bit more gradual, not as panicky as this time round. So we will skip this case study. So move back a bit more, you would see, tada, the COVID meltdown. Recap back again, just in case you forgot or you were not invested in the market. COVID was an extremely scary period for everybody. And for the right reasons, because it's the first time that we've seen countries locked down, not allowing travel to come in at all. For myself, I remember a period whereby my children's school is closed and life just was upside down. Very scary moment, and that is reflected in the stock market, because if the economy is not moving, there's going to be a lot of bankruptcy, correct? There's going to be a lot of layoffs, correct? So COVID, if we look, it started on 19 February and S&P 500 was at 3,380 points. Then by 23rd March, which is just 5 weeks, S&P 500 has dropped to 2,250. This is a 33% drop in 5 weeks. Versus right now what we've seen, 18% drop in 6 weeks. Now you know what is real panic. This one, if you can survive it, right now what we're seeing, chicken feed already. COVID was a V-shaped bounce because government started to print money, and maybe that saved the economy. But we can't assume that it's always going to be a V-shape. I'm coming to this discussion sharing optimism, but at the same time, I'm also aware that there isn't a promise of a V-shaped recovery. If it comes, that's good. If it doesn't, I've shared before on community posts that in global financial crisis, things can drag for 2.5 years, not 2.5 months. Be super ready for bad periods and be willing to endure pain. Now from here, we can move a bit left to the core story of today, which is Donald Trump's first term in office and where he started to yield his first acts of tariffs. You know, it's like once you have a new toy, you want to swing it around, you want to chop trees with your new axe. First time round, you try to chop small trees. Very short, very powerful. And after first term, now you get second term. You knew that you chopped small trees before, and now you want to try this new axe on big trees. What Donald Trump is wielding right now in terms of tariff level is way bigger than previous. But that gives us a blueprint of what could happen. Before I get there, have a smash the like button as we march towards 70,000 subscribers. Thank you very much. And let's flashback all the way to the start of 2018 when Donald Trump was already in office for the first time. Markets were actually rallying at the start of the year. January was a fantastic month, clocking almost 10% gain. But what happened, as we can see over here? It peaked out abruptly, correct? And that's because Donald Trump introduced his first tariff, which is his solar panel tariff of 20 to 50%. Markets got spooked out, wondering what would be coming up next, and their suspicions were correct. Because in 1 or 2 months later, the steel and aluminium tariffs started to come in, and that was 25%. Emerging economies like India were threatened by these tariffs. And as you can see, for the first few months in 2018, it was very choppy, correct? As of right now in 2025, the tariff threats have only just started, so do expect it to persist a lot longer. But there's still a silver lining. We fast forward all the way to May 2018, 4 months into tariff nonsense, China is the one now facing the brunt of Donald Trump, with 10 to 25% worth of tariffs. But weirdly, that did not derail the S&P 500 performance. It started to recover back and it made new highs by October. But as you can guess, tariffs could impact economic growth, and very soon that would weigh back on everybody's mind. It didn't help also that China also did a tit for tat, very similar to now in 2025, to defend itself against US. In October 2018, markets again abruptly peaked because there's again risk of tariff escalation. In a quick span of weeks, market corrected 10% again. Yet another correction because of tariffs, and this time round it was equally choppy. Then there was a very interesting event that took place in 2nd December 2018. Judging by markets going up, you would guess that is good news, correct? And there was a 90-day tariff ceasefire between China and US. Will we see something like this happening again? And if we do, you would expect the market rally, correct? But in today's tutorial, you can see that that rally is also short-lived. It doesn't mean ceasefire, it will go back up to the moon. Don't assume so because there are other forces at play. It seemed also very possible that market was selling the good news ahead of time, and after the ceasefire, markets trended lower and broke new lows for the year. But that was not the end of the story. Something spooked the market even harder in end December 2018, which is actually Fed's hawkish stance. Market wasn't expecting Fed to raise rates further, but Fed continued to raise, and what happened was market sold down. At this point, S&P 500 reached close to bear market ready. The 50-day moving average was trending downwards and all seemed very bad. But against all odds, market recovered. This again is a reminder, we can't predict the markets. And as everyone votes for what's going to happen in the future, sometimes a rally is unexpected. What we can see in 2019 is Donald Trump continues tariffs on China, Canada and Mexico. In fact, the situation worsened after the 90-day ceasefire. China's tariff was raised to 25% across. But by then, maybe the market was immune already. No big sell-off. Even Canada and Mexico supposedly negotiated tariff exemptions. Subsequently, China registered its slowest growth, and this ties into something that I discovered which could explain what Donald Trump is doing again this time round. US stock market, as you can see, seemed relatively resilient in 2018, but that cannot be said of the Chinese Shanghai index. If you deploy certain key events, Donald Trump threw the China tariff of 10 to 25% in May 2018, that caused the Shanghai Composite Index to drop severely. Unlike the US markets which recovered, the Chinese equity index continued to trend lower all the way until the ceasefire event. In my opinion, this is a period where market is voting that China's economy would suffer massively with this tariff war. Could it be that Donald Trump is using this tariff to take some hit on the US economy, but mainly to really slow down China, who he views is his top competitor? Collateral damage, I heard a bit, but make sure you heard more. Interesting finding, correct? And that also explains why Xi Jinping has probably learned his lesson from 2018 and right now in 2025 not allowing this to really derail the Chinese economy, but rather turn it into an opportunity. Xi Jinping in the last recent few weeks have met with EU leaders, have also met with BRIC leaders, and right now is on a tour in Southeast Asia. The importance to diversify from US has probably been his team's biggest learning point, and that's why China's index seemed a lot more prepared this time round. Comparing the Shanghai index versus the S&P 500, you will realize that this tariff war seems to be hurting US more than China. All in all, I would like to conclude a few things. Donald Trump has used tariff war before, and market has survived it. There is no such thing as crash to zero. I'm thinking that it could be also very choppy for the next few months ahead, as there is just some uncertainty. Yes, this time round he seems a lot more aggressive, but this playbook has been seen by global leaders already. If it's purely tariff, my guess is there wouldn't be a prolonged bear market. If it's a big recession, then that we all don't know yet. But as always, the future is unpredictable. Selling out from the market entirely doesn't seem very wise from the information I presented, correct? With that aside from here, leave in the comment sections what you think, and check out this video on what are my recent investments. I'll see you there too. Take care as always. Goodbye.